Neil Hall.
Hi, everyone. Appreciate your time today. To share a little bit about myself, I joined Van Wagenen in 2010, and prior to joining Van Wagenen, I managed risk on margin investment accounts. I have a vast knowledge of insurance-related products and services, and I work with lenders of all sizes nationwide to provide custom solutions.
That's right, Neil. And for a few of you who haven't heard of Van Wagenen, I thought I'd give you a little recap. Van Wagenen is North America's leader in claims administration, recoveries, commercial, residential, and auto insurance and insurance tracking. And we've been around for over 80 years. We're trusted by lenders of all sizes, and we provide custom solutions for protecting collateral and your bottom line against loss from small risk to the catastrophic risk. We know it's not just about products and services, but continuing to change the way business is done. It's about protecting your assets and reputation against the unforeseen through industry-leading technology, products, and services. Nikki?
Well, thank you. Yeah, thank you, Jeff. And we are so excited to have you as our guest speakers today as we talk about insurance claim and protecting your investments. Before we get started, I just want to let everyone know that you're currently on mute to avoid any background noises. Of course, we welcome your participation throughout the presentation. So if you have any questions, please type them into the question box in the GoToWebinar control panel, and we'll address those at the end of the Q&A session at the end of today's presentation. Also, a copy of the PowerPoint presentation is attached in the panel as a handout so that you can download and keep it for your records. We will also be polling our audience throughout the webinar and, of course, welcome your active participation. So those of you joining us today, why don't we, Neil, if you're good, Neil and Jeff, if you're good with this, let's just start off by kicking the webinar off with a poll question.
Great.
Sounds good.
All right, perfect. So those of you joining us today, let's find out what area of insurance claim is your biggest pain point. So, in regards to that, is it A, the total loss claims, B, damaged repossession claims, C, diminished value claims, gap claim processing, or after market claim processing? So if y'all guys can actually click on the one that's appropriate for you. Looks like probably about, we're getting closer to all of you responding. Go ahead, get those last clicks in. Just a few more seconds. Well, clicks are still coming in. There we go. Let's go ahead and close the poll and share the results. Sounds like the biggest pain point that our attendees are having is 38% total loss, followed by 32% damage repossession claims. Jeff and Neil, are you surprised by these results?
Not at all, Nikki, and that's exactly why we are here today, for the amount of time and effort it takes to handle these claims and a lot of information that you need to do so. Neil and I are going to touch on some of the things that we think can help you on a daily basis, and then at the end we'll give you the opportunity to reach out for us for more detailed information. Neil?
Thanks, Jeff. So in the next 30 minutes, you will gain a greater understanding of the claims process, including different types of claims and how they impact your bottom line and the best practices when filing these claims. The key is to ensure optimal insurance carrier recovery to lower consumer deficiency balances and eliminate less than optimum collection activity. In our experience, too often, money is left on the table by lenders either not filing claims or with a lack of experience and understanding of the claims process, not knowing how to negotiate a better settlement offer. Now, for some lenders, this could result in missing out on hundreds of thousands of dollars in insurance claims recoveries.
Gosh, Neil, it sounds like we've got a lot to cover, but before we dive in, I'm curious as to how the folks joining us today are handling damage repossession claims, which leads me to another poll question. If you could take just a quick moment and select whether you're currently handling damage repossession claims in-house, are you guys outsourcing it to another vendor or company, or are you currently just not filing any kind of damage repossession claims? So if you could just take and click the one that is appropriate for your organization. A lot of good information coming in here. Just a few more seconds if you guys want to go ahead and select the appropriate response. Okay, it looks like we've gotten pretty much everybody in there, so if we want to go ahead and close and share those results. Jeff and Neil, looks like 66% are doing this in-house. Is this what you expected?
Yeah, it's a really a good mix to see across the board. I think our goal today is to provide those people that are doing it in-house some ideas and thoughts that may help their current process, but also give you some things that you may be missing out on and ways that you could help your recoveries in the long run.
Perfect.
Great.
So the first area we're going to discuss today is damaged repossessed collateral. It's likely that many attending this webinar have recently repossessed a vehicle from a borrower, only to discover damage to that vehicle. Left unrepaired, future attempts to resell that vehicle or auction it off would fail to garner enough to cover the remaining loan balance. Now, Jeff, in your experience, what are the most significant things a lender needs to focus on when it comes to damaged repossessed collateral?
Well, Neil, that's a good question, and especially as we have a large amount of people that are doing it internally in their offices. There's a lot of things that go through the process of handling a repossessed vehicle with damage on it. And the first thing is, as long as we know people are actually doing it, that's the first thing. There's an opportunity to collect dollars out there, so be aware that you can file an insurance repossession damage claim, and you have the opportunity to do so as long as there's a policy in force. So then that brings us to the biggest factor here is, was there insurance on the vehicle at the time of the loss? So really what we're looking at here, especially in a repossessed vehicle, is there coverage when that loss occurred, and is the damage collectible? So is it a property damage or vehicle collision, comprehensive type loss to the vehicle? Those are collectible losses. If it's a wear and tear type thing, it's not collectible. And then we need to make sure that there was actually an insurance policy in force at the time of the loss. So typically, if we don't know the date of loss, you're going to be looking at the repossession date as the time frame of when you took control of that vehicle. So you want to know if there was a policy in force at that time, and typically you want to look back at least 90 days to make sure there was a policy in force, because a lot of times the insurance carriers will have a provision on their policy to provide lien holder coverage. Another thing you want to make sure, are you getting the right settlement amount? Are you collecting fully what you're owed for the damages on that vehicle? Just because that vehicle was repossessed and is back in your hands doesn't mean the insurance carrier has the right or should make any type of a less settlement than they would with the original insurance carrier on that vehicle. So if I'm the owner of the car, either now or previously, I have the right to make a full claim on that vehicle. So we want to make sure that we're getting the appropriate amount. We want to make sure that we're making sure that we have all the damages included in the estimate, that we're working with the adjuster who's handling it. Just because they make an offer or do an estimate, that doesn't mean that's the final amount that you need to settle for that claim. You need to make sure that everything matches up to the damage that you see on the vehicle. And then turnaround time. The whole goal of filing a damaged repossession claim is not to impact your whole remarketing process. And that's where really a good thing that comes into play is our work with Consolidated Asset Recovery Systems is when they're running the vehicle through the whole repossession life cycle, we can step in and take a side step for them to file the claim. All we do is get the information on the vehicle, the type of damages, and then we'll take it from there to make sure that the vehicle gets inspected, a claim is filed, and that will move separately from the remarketing process. So you want to make sure that you're not holding up your remarketing process. You need to collect those dollars when you move it through the line, and the filing of the claim should be an additional funds to help decrease any deficit that might be on that vehicle.
Yeah, those are great questions to consider when it comes to damaged repossession claims. So thank you, Jeff. Now, a big question I'm sure all of you are concerned about is, how does this impact my bottom line? So our research shows that repossessed collateral is damaged 50% of the time. So half of all repossessed vehicles will have had some damage to them. And that's a huge risk to your bottom line. Through a partnership like Wagenen and Consolidated Asset Recovery Systems, we have found that the average recovery per unit is between $1,200 and $1,700. So So depending on vehicle, age, condition, and damage amount, for some lenders, that can equate to hundreds of thousands of dollars.
That's right, Neil. And remember, impact to your bottom line can be minimalized if you take the appropriate steps to maximize your recoveries. We went through a couple of those earlier, but as just a refresh, remember that 50% of those vehicles are damaged. In order to collect on a damage repossession claim, you need to make sure that the damage is a collision or comprehensive type loss. Remember to make sure that there's insurance on the policy. You need to have an expert who can look back 90 days prior to the date of repossession and leverage that knowledge and experience of an in-house insurance specialist or a provider that might be able to help you out to make sure that you have insurance on those vehicles, because every dollar you can collect, again, will offset any deficiencies you might have. Also, we found that recoveries are most successfully optimized with an insurance tracking program. As you know, oftentimes a tracking or monitoring program can help lenders with their portfolio to be a good buffer against risk. It's a daunting process, though, and can involve a lot of mail, paperwork, etc., from the tracking perspective. So I would recommend that you work with an expert or a vendor like Wagenen, where we have a trained staff and an automated system that can handle those daily instances of in collecting that insurance. A lot of the times, really, it's just a monitoring process, making sure there's policy on that vehicle or knowing when that policy was canceled to go back and file that repossession claim.
It can definitely have a huge impact to the bottom line. Thanks, Jeff. So the second type of claim that we're going to discuss today is total loss claims. After your customer has totaled their car, they will need to take out another loan or a lease on a vehicle as soon as they can. They will want to know that their old loan balance is covered with the claims paid out. Now, left for the customer to file this claim from start to finish, they often won't recognize a less than fair settlement, and they may overlook such things like gap or aftermarket product cancellations.
Yeah, you're right, Neil. And I think from our original poll question, total loss claim handling was one of the big pain points for people, and it can be a pain point. You know, there's a lot of paperwork involved from the lender's perspective, but also you have a customer impact piece. You know, a lot of times your clients are faced with the direct disruption of their daily life when they're involved with the total loss, and handling the additional stress of the claim process can really be unbearable for them and can lead to some issues on your own side with them not being able to provide you the information you need. Handling the claim process for your customer or using a vendor like Wagenen to handle this process can take away that time-consuming effort on your end, alleviate staff to do more productive things, to create origination to the loans instead of handling the total loss piece. And collecting everything you can on that total loss will eliminate some of those deficiencies that might come on the other end. And really the goal is to provide a positive customer experience and help keep those people lifetime customers to get in another loan or another vehicle. Nikki?
Yeah, Jeff and Neil, how about right now if we ask another poll question? Does that sound good?
Perfect.
All right. Well, I'd be curious to hear what some of the common issues the folks joining us today are having when filing a total loss claim. So if everyone would please take a moment and select the options on the screen that apply to your organization, your feedback would be appreciated. So for example, when you're filing a total loss claim, are you guys getting low settlement offers? Is it a slow turnaround time? Or is it just too much paperwork to fill in and keep track of? Or, you guys are just spending too much time, with your employees handling this process, or maybe you're just not sure how to handle the gap or aftermarket policy cancellations. So you guys are actually chiming in, and we'll give you a few more seconds. All right, let's go ahead and close that poll and share the results. It appears the most common issue is the low settlement offers, followed by 44% of you a slow turnaround time. Jeff and Neil, is that typically what you guys are hearing?
I would say definitely low settlement offers is a huge issue, and that's partly why we wanted to be able to come out and provide some insight to everybody here. And the turnaround time is also can be an issue, especially when you're handling one-off claims with some of these insurance carriers. They don't have the relationship that you've been dealing with them on a regular basis. So both of those things are big issues that can come up. I think as we talk through some of the issues on the total loss piece, I just want to remind everybody that what Neil and I are doing today is just trying to give you some high-level ideas and thoughts to think about. We're more than happy. We'll provide our information at the end to help you guys if you have questions on just situations you have in your own office, if you want some more information about how we interact with collateral asset recovery and what some of our products are. But really, let's start with the total loss piece. The question to really ask yourself is, do you have the best practice in place when it comes to filing that total loss claim? If not, you really need to consider some of these things. It's really treat that total loss claim as a negotiation. The insurance carriers obviously do from their end. There's a lot of insurance carriers, and especially as we know, new and used car sales have exploded over the last couple of years, which has caused more people to be on the road, which then leads to over 6 million accidents a year, which then causes the insurance carriers to add more people, and those people really aren't always experienced in what they do. So just because they work for the carrier doesn't mean they necessarily know the most appropriate way to handle the claim. Too many times we hear that either our clients or their borrowers don't know that they could have handled the claim differently. They could negotiate. They don't feel comfortable negotiating, and often people in your office who are handling these claims really don't have the expertise and knowledge to handle it and negotiate a settlement with the insurance carriers. The insurance carriers are gonna give you an offer to settle that claim based on what they think it may be worth. That doesn't mean that's what it's worth. A lot of times different carriers use different evaluation systems. They do or they don't use comparable vehicles in your marketplace. So there's a lot of opportunity to find out different ways to increase that settlement offer. You need to be able to negotiate. Just because they give you an offer does not mean you need to take that offer initially. Make sure you go through their information. You want to make sure you get the entire total loss package from them. That's photos of the vehicle, a copy of the evaluation report, not just their verbal word of what they're going to provide you for a settlement on the vehicle. And always make sure that you are comfortable with that settlement before you go ahead and issue the letter of guarantee to the insurance carrier. Because that letter of guarantee, as you know, confirms acceptance of the offer, and once it's done, there's really no other opportunity to negotiate a higher settlement dollars. So when you get that evaluation process in, a lot of the hard work in securing that top dollar settlement happens then. You need to review that information, review the vehicle make, model, options, packages, because not all insurance carriers have experienced estimators or adjusters who are going to make sure all those items are on the evaluation. And you may want to consider reviewing all those settlements with either an outside group or have some assigned people and trained people within your organization. Reviewing 100% of the total loss claims has shown in our experience worth the time and energy of certified staff, and we found that in many instances settlements can increase substantially when we're working with clients. So you want to be able to make sure that even in a case where the insurance carrier provides you a settlement offer and it may pay off whatever the loan may be, that doesn't mean that that's the optimum settlement. You can expect and negotiate a higher settlement dollar, and anything over and above the loan payoff is an opportunity to increase that customer experience with your borrowers, to provide them with a check saying, hey, we helped handle this claim for you. Here's some additional funds. Great opportunity to put it back into a new vehicle and get yourself in a new vehicle and a new loan. So there's always a time to create a positive experience with those customers and keep them returning and being lifelong customers with your group. And lastly, when you're handling a total loss claim and you may have a gap claim along with it, you want to ensure you're getting the top settlement dollar, because that may come back later when you're handling the gap piece with the gap insurance company, because they're going to come back and they're going to scrutinize your original settlement offer. So in the long run, it can help your gap claim process. And another thing is, when you're handling those gap claims, you want to make sure that you're doing some pre-gap analysis to make sure you're getting what the optimum settlement should be on that piece also. And then product don't forget those aftermarket product cancellations, because all those dollars can help decrease that deficiency. Make sure you're checking that was the gap policy in place, and if not, is there an opportunity to get a refund for the premium that's still outstanding if you're not able to file a gap claim. And make sure all your documents are in, make sure they're in a timely manner. It's a lot of work to handle those gap claims, so I always recommend utilizing a vendor or someone similar to Van Wagenen to help you along that process. It can benefit you in the long run.
It's great to know, Jeff. Thank you. So obviously you can see there's a lot of money you may be leaving on the table. So when you implement the best practices that Jeff just mentioned, increased settlements can actually be your reality.
That's right, Neil. So this slide really shows you some of the benefits that you as an organization can realize if you're out there optimizing your total loss settlements. For the majority of the clients that we work with, when we utilize our skill and knowledge and relationships with the insurance carrier, on 40% of those total loss claims that we handle, we're able to get a settlement offer over and above what the initial insurance company's offer was. And those offers are typically 8 to 10% above what that initial offer was. So, you're talking on average, you're probably $1,200 to $1,500 that you're able to collect on a decent vehicle with good condition and average miles on it. So there's an opportunity out there to collect additional dollars and have an impact on the efficiencies and your bottom line.
You're right. So those are definitely some impressive numbers we're seeing within our recovery department. So next, we're going to speak to diminished value claims. When your leased fleet returns at the end of term, some of those vehicles may have been in accidents and repaired during the life of the lease. Inherently, their value has decreased, even if the damage has been repaired. There is a viable claim with the insurance of the third party at fault in the accident for this diminished value, during a certain window of time, of course. So filing these claims successfully and timely can actually recover upwards of 16% of the vehicle's value.
That's right, Neil, and some things we need to think about when we're talking about that large number is, number one, diminished value claims are typically filed from a borrower or lessor's perspective on leased vehicles. But there is also an opportunity to file diminished value claims on repossessed vehicles if there is no damage on the vehicle or it's minor wear and tear on the vehicle at the time the vehicle is repossessed. So for everybody on the phone, if you have a repossessions or if you have leased vehicles, diminished value claims can be beneficial to all of you. And really, what is a diminished value claim? Well, first of all, there has to be an accident that the vehicle is involved in. And if it's a lease, it has to have occurred within the lease period. And then that damage has to be repaired. If it's repaired, then we need to find out who was the at-fault party for the loss. If it was the other party or third party, as we call them in the insurance industry, then we can file a claim against that third party for potential diminished value claim. So you need to really make sure with all of these claims things, are you staffed appropriately to handle these claims and really negotiate the paperwork and pushback that you may have from all these situations, specifically dealing with diminished value claims.
And Jeff, how do diminished value claims impact the bottom line?
So Neil, that's a good question. To give everybody a little perspective, we tried to break it out. Typically on a average lease book of business, there's a potential for 3 to 4% of those vehicles to have a diminished value claim. And remember, a diminished value claim really is, like I say, the vehicle was in an accident and damaged within the lease period. It was repaired and paid for, or at least the at-fault party was the third party in this instance. And then that means that when that vehicle is going to be sold, it will be flagged as having been in an accident. So let's take, for example, my 72 Ford Granada was worth $10,000 before an accident. But now when I go to try to sell it because it was in an accident, even though it was repaired properly, it may only take $8,000 on the open market because somebody saw on Carfax facts or car that their vehicle had been in an accident. So there's a decrease in value, and that's what we're talking about when we say diminished value claims. And depending on the vehicle type and condition and the damage severity that was repaired, those claims can average $1,500 to $1,900. So diminished value claims can be filed on leased and repossessed vehicles, that we say, and it obviously can have an impact on your bottom line.
So to recap, when filing a diminished value claim, you need to consider the following. The vehicle needs to have been in a loss and then repaired. There's no diminished value claim on damaged vehicles that have not been repaired. And the claim would be filed against the third party's insurance carrier as part of the original claim. And you want to make sure that you're always collecting documents to support your claim, including estimates and photos. And then lastly, you're going to want to review your starting lineup on how you currently address each of these claim situations.
You know, Jeff and Neil, you share a lot of great information with us so far, so I'd like to ask everyone to get ready for another poll question. So, you know, after listening to this information shared on today's webinar, I'd like for you to rate your organization's current claiming file processing system on a scale of 1 to 5, 5 being the most successful. So if you could take a minute and just select where you feel you guys fall. Again, 1 being the least successful, 5 being most successful. Well, clicks are coming in. I'll give you guys a few more seconds if you want to chime in. There we go. So let's go ahead and share the results where we're at. So it's interesting. It appears the majority of you guys are falling between, you know, the average and a little bit above average. Jeff and Neil, do you find that most lenders have a pretty good handle on this?
Nikki, to be honest, I think most lenders believe they have a very good handle on it, but when you get into it, there's an opportunity to collect more dollars, as we covered on the total loss piece and the repossession piece. And a lot of time it's really because of manpower and the relationship piece with dealing with the insurance carriers. And that gets back to that whole part where we talked earlier about the slowness of handling the claim. When you're able to quickly maneuver through the insurance industry and file those claims and keep after them, to be aggressive to settle the loss, those dollars can come in quicker and offset those deficiencies and hit the bottom line sooner. So I'm sure everyone is doing a good job, but we can always do better, and that's why we're here today.
Yes, that's good advice, Jeff.
Thank you. And I just want to, just as a kind of a recap for everybody, let's talk about some of the things that we really talked about and how you can hit a grand slam on your insurance claims. You know, everyone, like we say, feels that they're doing good, but we can always do better. So some things when you go back to think about is review all those settlement offers thoroughly before signing off on them. Whether it's a total loss and you're doing an evaluation to make sure the vehicle has the appropriate market value for that settlement, or if you're handling a repossession damage claim, to make sure all the damage is included on those losses. Review the settlement offers before you sign off or agree to the final numbers. And then again, as we talked about, negotiate, negotiate, negotiate. The insurance company's first offer is not their final offer. They may consider it a low ball, or they may consider it a fair value, but that doesn't mean they've included everything on the claim, either damage-wise or from a total loss perspective. So make sure you go out and negotiate for a higher settlement. Your staff may not feel comfortable doing it, but it's going to be worthwhile in the end to make sure that you are reviewing that information and negotiating. And then know your portfolio. Tracking or monitoring insurance on your portfolio allows you some of the data that you're going to need to be able to maximize the recoveries on those repossession damage claims, as well as having a good feel of what your risk is out there for the vehicles that you have in your portfolio. And make sure that you know the true value of your vehicles before you get into either the settlement of the total loss or a damage claim, because Knowing those vehicles, the make, the mileage, the condition of the vehicle is going to help you in the long run, as you said, of those claims. And really tracking and monitoring insurance is going to help protect your portfolio and give your borrowers a better positive experience if you can collect those extra dollars to help offset any deficiencies in the long run. So there's a lot of things you can do to help yourselves as well as your customers, because a positive customer experience can result in a returning and lifelong customer, and that's really the key in all of this. And you'll know that working with the group at Consolidated Asset Recovery Systems, they do a great job through the repossession process and the repo life. And these are just some things that you can tie onto the side of that process that we can help you collect even more money from that perspective.
So, wow, a lot of great information shared in our webinar today, Jeff and Neil. Thank you so much. So are you guys ready to move into the Q&A session and begin answering some questions that were submitted during our presentation?
Certainly.
Well, perfect. Before I read the first question, I wanted to let everyone know that if you have additional questions that come up, you can still submit those during the Q&A session. And again, just to remind you, don't forget to download today's PowerPoint presentation handout. It's attached in the control panel, along with a couple of brochures outlining services and products offered by Consolidated and Van Wagenen. So Jeff and Neil, let's go ahead and get started with our first question. And that question is coming from Cynthia. She wants to know, we handle claims every day in our operation and settle based on the insurance company's offer. She's asking, what can we do differently?
Well, it's a good question, Cynthia. I'm glad you took the time to ask. Like we talked about, a lot of things here is when you're getting those offers of settlement in, don't take it as it's the final word. Make sure that you're reviewing all the information on there. I mean, it's as simple as making sure that the vehicles match up, that they have the same make and the model, the mileage is correct, because not all times are the adjusters getting the correct information. You know, we've had horror stories where those of you who are in snow areas where the adjuster won't get out of the car, and they're evaluating the vehicle from sitting in the heat of their vehicle because it's too cold out and they don't want to freeze their toes. So make sure you make all the damage is correct, the vehicle type is correct, the make, the miles, the packages on the vehicle, the options. A lot of times different evaluation systems call different options and packages by different names. So you want to make sure you have a good idea of what's on the vehicle. Thanks, Cynthia.
Perfect. We also have a question here from Brandon. Brandon, thanks for joining us today. He wants to know, what is the best tool to negotiate a higher settlement offer?
Well, like I said, tools are just a help or a crutch. There's different tools from the perspective of, like I talked about, when an insurance carrier is writing an evaluation on the vehicle, there are 3 or 4 different types of evaluation tools that different carriers use. So number one, you want to know what tool they're using, and that will be on the copy of the evaluation. But then you need to know which packages and options that tool uses. So one thing you can use is when the vehicle is purchased, the bill of sale or the marketing slip that shows all the options that were on the vehicle at the time of purchase. You can compare that to what's on the evaluation piece. You can use, for your own sake, comparable vehicles in the marketplace. That may be a little more difficult if you're across the country. So, you know, using a vendor to help utilize some of those questions and tools can help you, because we have access to things across the country, different marketplaces, that can really help us get that valuation up.
That's great information, Jeff. We've also got Kevin, who's wanting to know, on a skip account that has been recovered after 200 days, is there a way to find out if the unit has insurance?
Well, if we have any information, Kevin, of who at the last time we knew there was insurance on it, we can work backwards from there. But to be honest, there's no, I think, and most people know, there's no Although we'd like to have it a magical cloud that we can bump a VIN number into to make sure if there was insurance on the vehicle at the time. So a lot of things that we use is we will go follow up with who the last owner of the vehicle was, or who the owner at the time was, who their insurance either agent was, insurance company was. We can do checks to see if that vehicle has been in a loss, and if it has been in a loss, can we find out from the report what kind of insurance may have been on the vehicle at the time, because a lot of people, especially with vehicles, change policies a little more frequently than they do with their homeowners. So there are some tools and things you can do out there, but the first thing is that we'll start with is what was the last carrier on it, and then start from there to work forward.
All right, thanks, Jeff. That's good information to have. And we also have another question from Chris. Chris, thanks for joining us today. He wants to know, can you elaborate on what you meant by pre-gap analysis? What should be reviewed?
Sure. What that really is a couple things. When the gap claim is filed, depending on the gap carrier, and so we have to know what the individual policies are sometime. There may be limitations on what can be filed for that claim because of payment gaps or delays or other issues that they may not honor a gap claim is. So what we would do typically is look at what the course of the payment history is of the vehicle, what the average APR is, etc., to find out, can we file a claim with that specific carrier based on the payment history and where we are from that standpoint? And if not, then we do that, and that's all part of the pre-gap analysis. That'll tell us, well, if we can't do that, then we may have an opportunity to file a gap premium return. And the reason we do that, both of those processes, because some of the gap insurance carriers, if you file a gap claim and then they won't honor it because of a payment issue, or it may be the vehicle's involved in a illegal activity or a DUI or whatever the case may be for that policy, if they deny that claim, they won't let you do a gap policy cancellation to get that return of premium. So really the pre-gap analysis is really to define, can we get a gap policy claim filed, and potentially what is that claim amount based on the parameters of the insurance policy. So I hope that helps a little bit. If not, feel free to call Neil and I, and we can walk you through it.
Great, thanks, Jeff. We've got another question from Mariella. On this sheet, is asking, if the insurance determines the value of the vehicle on a claim, aren't they always right on the offer settlement? If we don't accept it or agree, then what are our options then?
Well, I think the best way to think about it is, if it was your vehicle and they offered you a value that you didn't feel was appropriate, would you take it? The answer probably is no. So just because they offer it, that doesn't mean that's it, final, done, in concrete. So that's where, like I say, we use tools and experience to know what each insurance carrier uses to evaluate those vehicles. So yes, they're not going to just say, because they offered us $10,000, I say, hey, I want 11, give it to me. But I need to support what I do. So I go back and look at all the options on the vehicles, the packages, the mileage. Were there any added aftermarket things added to that vehicle to enhance the vehicle's value? Then I'm also looking at, are there any comparable vehicles where I live, and what is the value of those to help support my case? Those are all things that you can do within your organization. And that's why I say, it takes a lot of time and effort to do it, but in the long run, it's beneficial. So their initial offer isn't the final word, and there is opportunity to support your case to get additional dollars.
Perfect. Thanks so much, Jeff. Mike, thanks for joining us today. Mike wants to know, if we don't know the date of the loss, can we file a claim for damage on a repossessed vehicle?
Good question, Mike. A lot of times we're working with the repossession date, as the date of loss, and then working from there to see if there was insurance on the vehicle. Other ways of finding out is we'll do a search to see if a police or incident report was filed and use that as a data loss. And then even sometimes it's dependent on the relationship, you can access the borrower if they're willing to assist and provide information on that data loss. So there are some alternatives, but typically when we originally start the claim, we'll use the repossession date as the data loss and move from there with the insurance company. And if they have any issues with that, then we'll move on to trying to locate an incident report to support the data loss.
All right, thanks, Jeff. Tina here wants to know how long it takes your team, Van Wagenen, on average to get your settlement offers. It seems like she's constantly having to hassle with them and wondering if there's a way to expedite the process.
I would say if we're talking strictly the total loss piece, once we get a claim in, we're going to have it get that initial offer in, review it, and get our supplemental settlement offer back to the carrier, and then hopefully negotiate it out within probably 7 business days, typically within 5 business days. And really, Tina, I can understand how frustrated it can be, but it's a matter of being proactive and staying on the insurance carriers. And a lot of it is, from our perspective, just the relationship and the volume of claims that we handle. We'll handle over 100,000 total loss claims in a year, so we know majority of the insurance carriers and a lot of times the adjusters within different offices. On a side note, on the GAP process, we have specific GAP companies, individuals within their area with specific either email or fax lines that we can send information to help speed up the process there. And that's similar on the diminished value side, where we have each company has a specific group and we have straight access to them to help move the claim process through.
All right. And Jeff, Nikki, she wanted to get some clarification on the diminished claims. She was asking, are you saying if the vehicle was damaged, then repaired later, repossessed, if it affects the amount that we get for selling the vehicle, can we go back to the insurance company and request more money? Yes.
So what I was clarifying on the repossessed diminished value claims pieces, while the vehicle is with the borrower, it gets involved in an accident, and then it's repaired satisfactorily, and that accident was the fault of a third party, and that third party pays that claim. Then if there's no supplemental damage to that or additional damage or accidents from that time until the vehicle is repossessed, there's an opportunity to file that diminished value claim with the third party. And really, I want to make it clear that that claim is separate from any remarketing process that you may do. So what you may repossess the vehicle and move it through your remarketing process to get it into auction and sold, etc. The diminished value claim would be set up separate of that. So you're really saying at the time the vehicle was repossessed, it may be worth $10,000, and this isn't what it's worth on the auction, but this is what it's worth on the open market, and because of that damage and the loss, you wouldn't have been able to sell it if you wanted to for $10,000, so there's an opportunity for a diminished value claim on that piece of it. So there are two separate pieces, the remarketing process as well as the diminished value claim process.
Oh, that's really good information, Jeff. I know Brandon had a follow-up question to ask as well. He wanted to know, on the third-party insurance companies, other party at fault will sometimes cut a total loss check to their customer, even if they are aware that they are the lien holder. So do you know what rights a lien holder would have to fight that situation?
Well, if a lot of times when we're handling the repossessed damage claims, that issue will come up where the insurance carrier paid for damages on a vehicle, paid it directly to the borrower at that time, and did not include the lien holder on it, and the borrower never got the vehicle repaired. In those cases, we're able to go back and file a claim with that primary carrier to collect those dollars. The majority of insurance carriers don't have a provision in their policy regarding that practice. A lot of times it's just a business practice where they'll say damages under $5,000 they're just going to pay directly to the borrower and not include the lien holder on it. So those opportunities we can go back and collect on. We're specifically talking about a diminished value claim where the third party paid for the damages, yet it sounds like the damage may not have been repaired, then there's not an opportunity to file a diminished value claim on that piece of it. And those are two different situations. I hope I answered that. If not, Brandon, feel free to call me and I can talk through it and maybe understand the question better.
All right, thanks, Jeff. Lupe wants to know, can we use a property damage appraisal report, a PDA, to negotiate with insurance companies on low offers?
You can. I don't know that it's going to be the best tool to use, especially in a total loss piece. It should have information on what you need for the vehicle and give you an idea of what the condition was at the time of the loss. So from that standpoint, you can, unless they did an actual evaluation as far as a market value for the vehicle, it's not going to be as beneficial, but it can be used where I talked about before, making sure that the damage and the vehicle type and everything matches the same. Because a lot of times the adjuster may say that the condition of the vehicle was low to poor, yet it may be medium to high based on the photos and the things you're seeing from that PDA report.
Okay. All right, perfect. Also, a great question that came in. If an agreement on a settlement amount cannot be reached, what is the next step?
Well, I can tell you I've never had that experience. So I mean, there's always the potential, and I don't think anybody probably on this call would wants to do it, of filing a small claims, depending on the value, small claims court issue. You do have the opportunity with the insurance carriers to go to the Department of Insurance and file a complaint, and then they will reach out to the insurance company. So I know some of our clients have done that in the past when they've had issues with delays in handling claims. But to be honest, out of the claims that we've handled, we've never really had that issue. We've been able to negotiate a feasible settlement on every claim that we've handled.
All right. Yeah. Yeah, we had someone asking, if, what can be done to file a complaint against an insurance company that's either taking too long to settle, doesn't pay what we think is fair. So they, were wondering who holds those insurance companies accountable.
That is the Department of Insurance, or in some states it's the Department of Commerce. It's different in each state by the title they use, but there is an insurance commissioner whose job is similar to, I guess you'd say, like the Better Business Bureau, to make sure that the insurance carriers are handling those claims in a timely amount of time. So once the claim is filed, they have, depending on the state, 30 to 60 days to get a response back out to you and to keep moving that claim forward. So the insurance commissioner in your state would be the department you want to go to. All right.
All right. Hopefully that was a good response there. I'm going to just do a couple more questions here, Jeff. One is from Scott. He's saying that they have an efficient remarketing program, so will filing a damage repossession claim impact their current process?
Not at all. It's a totally separate process. It does not impact it at all. And like I talked about earlier, especially with working with Consolidated Asset Recovery Systems on our piece, all we would need to know, or you would need to know on that damage repossession claim, is once it's been secured, just to get a copy of that initial inspection to show the damages and the photos, and then based on that, we had checked to make sure there was insurance at the time of the repossession or around that time frame, and then start the process of filing a claim. At the same time, that vehicle is moving through the whole remarketing process. So there really is no delay or impact on that compared to the damage repossession piece. And then that way you will still have your dollar stream coming in from the remarketing piece as well as the claims piece.
All right, thanks, Jeff. And James, he's just asking, is it common to file a diminished value claim at the same time as the repair for the damage claim is ongoing?
No, it's not. It's typically you want to make sure that the vehicle was repaired properly. And so there's two things. You want to make sure the damage was repaired and repaired properly, and you want to make sure there was no supplemental claims processed on it. And so you can get the full impact of the loss. Typically on a lease vehicle, because state statutes run on average 3 to 6 years for filing a claim, the majority of our clients like to wait until the vehicle is returned. That way we have the information, we can file the claim, and then for a lot of purposes, it's you don't have to borrow the lessee with the information on the diminished value piece. You can just handle it outside of having to get them involved in the process.
All right. Gosh, that's a lot of great information, Jeff, that you've provided. And we're coming up on the hour, so I just wanted to say thank you, Jeff and Neil, and thank you, everyone, for attending our insurance claim recovery webinar. We hope you found it beneficial. And if you have any other questions, please feel free to reach out to Jeff, Neil, or myself. Our contact information is on the slide. So once you leave today's webinar, you will receive a 5-question survey, and we would appreciate it if you just take a few seconds to provide your feedback. So on behalf of Cars and Van Wagenen, thank you for joining us, and have a wonderful day.
Thank you.